Hi, I'm Paul Heffernan and I lead the ETF business at Waystone. I'm here with my colleague Henry Glynn, who heads ETF capital markets and distribution. And we're here today to talk about ETF capital markets. And when we talk to investment managers, the newest part of building fund products for them in ETFs is this concept of ETF capital markets. So Henry, what is ETF capital markets?
ETF capital markets, multifaceted, but to sum it up, it's managing the relationships between liquidity providers. Liquidity providers is a catch-all term for authorized participants and market makers. Authorized participants are the entities that are contractually able to create and redeem in the ETF. They're the only entities. So if you think about it from a funds perspective, where you have subscriptions and redemptions in the funds world, creations and redemptions in ETFs, and the ones that facilitate that are the authorized participants. The market makers, as the name suggests, are making a market throughout the trading day. So quoting on exchange, posting bids and ask prices throughout the day. So the role of capital markets is to engage with the liquidity providers on a daily basis throughout the trading day. That's onboarding APs onto your ETFs. That's engaging with them in terms of market making, so encouraging them to be actively quoting on exchange across the various different listings of an ETF. And then it's monitoring those spreads throughout the trading day. So in the US, you'll often hear the term the lead market maker. We don't have the same function here in Europe, but what we do have is referred to as sponsored market making or contractual market making. That's where the ETF issuer engages with the market maker to do the arrangement is that they have a target spread, so a maximum spread that is driven by the underlying securities of the ETF. And then the role of capital markets is to make sure that they're holding up to that spread on a daily basis throughout the trading day, monitoring the spread when it kicks out throughout the day, keeping on top of them and making sure that if an investor is looking to trade the ETF on exchange, that they're not hindered by wider spreads. That's the whole idea of the contractual market making. It goes back to the multi-exchange setup of a European ETF, that they're listed across various venues. You see with ETFs in Europe, successful ETFs are listed in 4 or 5 different venues in various different currencies, and there is talk of consolidated tape, but at the moment it is a little bit fragmented, so that there is a need for that contractual market making relationship.
And so for asset managers that are new to the ETF, the concept of ETF capital markets, you use actors like authorized participants, market makers, liquidity providers. Are they all different actors, or are they one of the same when it comes to the European market?
Yeah, liquidity providers is the catch-all term for all of the entities, a broker, if you will, right, in terms of the trading world. In the US, there's a distinction between the role of an authorized participant and a market maker. In Europe, they're often the same entity. So the difference is the role that they play within the ETF ecosystem. I mentioned that the authorized participant creates and redeems. The market maker creates a market throughout the trading day. So they're often the same entity, but very different roles. And just talking about the capital markets there, the main piece is that broker relationships, that engaging with the liquidity providers, as I say, throughout the trading day. But there's I would call that the nuts and bolts of ETF capital markets. One of the other really key pieces is engaging with sales teams and end clients in terms of executing in ETF.